All right, so let's go over Bitcoin here. I'm going to give a couple of different scenarios that could play out and how to react to each of them, and as well as the support and resistance clusters that I'm paying attention to. First and foremost, anybody here making bold predictions directionally just doesn't understand how markets work. You should just ignore them completely. That means like anybody who says, oh, Bitcoin's going back down to 12K or it's going down for new lows, it's going down to 21, 22, or even 23, 24, or it's going to rip back up. Guys, there's too many unknowns in this market for anyone to be making accurate predictions right now. So some of the things to keep in mind, however, are one, Grayscale, the Grayscale ruling. If Grayscale wins this case against the SEC, and it could be announced as soon as tomorrow. Right now, it's like in the top 98th percentile for how long the case has been going on to not have a conclusion. So, my personal expectation would be that we actually that Grayscale wins, right? And if Grayscale wins, it basically means that there's no excuse to deny a Bitcoin spot ETF at some point in the future, potentially next year. And that would be extraordinarily bullish, right? And if we get a positive Grayscale ruling tomorrow or sometime next week, that could be what pushes us back up to the top of the range, right? So we have our trend line here that broke, we spilled off, and it's very common to back test a trend line. But we also just have a range developing here. So over here we had the top of our range at roughly 25K. We established the top of the range at our 2x long margin pressure level that we talked about being just insanely strong resistance. We had kind of multiple attempts to take it out, failed, started shying away, and now we've rotated back to the bottom of this range, right? So we've hit this range around 25K twice now, and we see there's demand there. We may just be ranging and we may be at the bottom of our range. That's kind of the bullish scenario. Now, if we reclaim that trend line, and I'm not saying we're going to, but if we reclaim 31K, we pop up above 32K, I think it's going to be very, very, very bullish. Like we start breaking up above 32K, there's just a lot of room to run. And in my opinion, you will want to have a lot of exposure to the market. But we're pretty far away from that right now, so I don't think it's something that people need to be FOMOing into. We're nowhere close to that. We can cross that bridge when we get there. So that is literally an unknown, and that's why I say like anyone who's telling you what direction the price is going to move in just doesn't understand how markets work. If we get a positive decision, price will go up. If we get a negative decision, price will go down to some degree. Now, these support and resistance levels can help us determine how far down and where the demand is and where the supply is. The other thing to mention here is that, hey, we are almost towards the end of August here. So that's, September 1st. We're closing in on this. September is historically the worst month for the S&P 500, going all the way back to like the early 1900s. Just historically, September, terrible, terrible, terrible month. You can amplify your gains in the S&P 500 historically by maintaining exposure to the S&P 500 for 11 months out of the year, and then for September just being in cash, right? And historically, you would have outperformed the S&P 500 by a lot. Same thing for Bitcoin. The S&P 500 and Bitcoin, both risk assets to some degree, and for a large period of time, or for at most times, they trade with a high degree of correlation, right? So keep that in mind. My bias, especially now that we've broken this trend line, and I'm not counting out the fact that, hey, we could have this bullish Grayscale ruling and we could run it back up to the top of the range. But my bias for the month of September is to actually be just trading level to level. Spot exposure is going to be minimum, and I'll actually be introducing a little bit more risk in terms of like DeFi and stablecoin yield farming and whatnot during that period of time, just because historically we would expect somewhat of a correction. Very similar to with the S&P 500, we expected a 15% return on the S&P 500 from last November all the way through June, July of this year, which is exactly what we got. And that's based off of historical midterm election analysis. 6 months after the midterm election, usually the S&P 500 on average returns about 15%, right? And that's exactly what we got. Now we may not get this drawdown in September. We could have a positive September, but it would be out of the norm. It'd be very out of the norm. So positioning for September is something to keep in mind. We also have FTX potentially selling off some Bitcoin, some Ethereum, and some other altcoins, and that selling could start as early as mid-September, I think like September 13th. So that's another reason to potentially be a little bit bearish on the crypto market in September. We also have a big unknown with CZ selling Binance, selling Bitcoin to prop up Binance Coin. That is a major, major unknown. So again, anybody who's telling you directionally which way this is going to move, they don't know the situation there. All right, they don't know how bad it is or if it's not that bad at all. So all of those things we want to keep in mind. And in my opinion, I'm just going to be looking to trade level to level. So let's actually zoom in and see how we might do that, and zoom in and see how Bitcoin's actually been reacting to some of these levels. So we actually had a massive liquidation straight through this 3-to-1 risk reward level and a 10x long margin pressure level. You see, we got a small bounce here. Keep in mind, a 10x long margin pressure level, it's not super strong. 3-to-1 risk reward level is decently strong, and we did get a bounce there. I wouldn't be surprised to come up and tag this. I wouldn't be surprised at all if we come up and tag this at some point. Now, we may go lower first, but at some point, I do expect to tag this and test it as resistance to some degree. Obviously, we fell through we held resistance at 31K. We bounced quite a bit and consolidated between our 3x long and 10x short margin pressure levels, took the highs, then fell off the cliff straight through our 3x short margin pressure level, as well as that trend line. That is obviously super bearish, fell through. And where did we actually establish support? Well, really on the back, if we zoom back out to the 4-hour, on the back of our prior range highs, right? In line essentially with where we found demand in the past. The last time we took a dip, I'm not going to say this is a double bottom because technically this is a higher low, although some exchanges actually made a lower low because of, slippage or whatever. The Wix pushed down a little further on some less liquid exchanges. But we've now established a range here, essentially between our prior range low, which is this black line, and our 4x short margin pressure level, being the bottom of our range and our support region, and our 2-to-1 risk reward level and our 5x short margin pressure level being the range high, right? And where are we really reverting to? Where's kind of the volume profile coming in at, and where are we reverting to? That's our 4x long margin pressure level, right? So essentially the midpoint of our range. So range high, midpoint. I know it's not the exact midpoint, but it's where price action is gravitating towards. And then 25.4. So for the foreseeable future, I do think trading simple basic trend lines here. You see, you had the trend line break towards the top of the range. That's your trigger to get short. Target back towards the middle of the range. We get too out of whack to the bottom side. We probably want to be going long, targeting the top of the range. Keep in mind some of these just short-term trend lines. If we break back up above this, then all of a sudden we're looking pretty bullish, right? But if we get a bounce here, look to just target the bottom of the range until we potentially reclaim. And again, back towards the top of the range. Now, if we break out of either side of this range, your next targets are, like I said, 27.5K, right? So, we start breaking out and reclaiming trend lines or whatever. Probably something like this. We keep it relatively tight and we just target 27.5. We just zipped straight through this level. I do think we come back up and test it at some point. Now we break out of the bottom of the range. This is your sweet spot for getting aggressive. Now there's quite a bit of space between all of these support levels. So we could get a situation where we really chop in here and it gets quite confusing. But in general, there's a lot of incentives shifting in the market for buyers to come in and shorters to leave, which both push the market up, right? So this is our 3x long margin pressure level. What does that mean? Our 3x long margin pressure level off of our 15K low, which is our bear market low, is the level at which you can start going long on 3x level or 3x leverage. Market participants can start going long on 3x leverage while maintaining a liquidation point below the bear market low. So you can take a very simple bet of, hey, the bear market low is in. I'm going to go long on 3x long leverage, maintain a liquidation point down here. And even if we did fall down, you're not getting liquidated until we make a new low. Okay. So the incentive to go long down at 23.2 increases drastically. And the same thing can be said on 5x leverage at 24.4. And on the flip side of that, you have shorts that are going to be, you have fewer shorts entering the market at each of these levels based on some of the highs that we've made and people wanting to maintain liquidation points above these local highs, right? So you have all of these incentives shifting in the market between 23.1 and 24.4. 23.2 and 24.4. So that's a very strong region for a reversal. Very, very likely for a reversal. Pushing through all of this would take some massive negative news catalyst. So actually, in my opinion, trading level to level, sure, we may backtest this region, but in general, over the month of September, I am personally looking for us to drop into this range. Now, it may be very, very possible that the low here is in. We had extreme liquidations. We became extremely oversold on the 4-hour RSI. So I'm not saying that we are going to drop into this region. What I am saying is I'm paying attention to it because if we do drop into this support region around 23.2, I'm going to clean this chart up a little bit, between 23.2 and 24, I think this is a really, really excellent region to be bidding in the month of September, right? Because we know September's, historically a down month, right? We could just see something like this. Right, that wouldn't be too out of the question. Now, if volatility comes back in, volatility has been lower. If we get a positive grayscale decision, right, that could push us up back to the top of our range, and then we just rotate back in September to the bottom of our range. And if we're in September and we've rotated back up to the top of the range, or at least up to 28, 29, and then we move back down to the bottom of the structural range that we would have then held by 2 times, then yeah, I'd buy this. I'd be looking to buy 25, 26. But as of right now in September, I'm looking to be a little bit more sidelined right now, looking for, something like this, right? And then push out of that in September. I'm not terribly worried yet about us going below 23.2. I do think that if you're looking for 20K, 21K Bitcoin, I do think it's possible, but I think you're being a little bit greedy and ignoring how much support we have in this region. Right. So I hope this video was helpful. If it was, please like and subscribe, follow on Twitter. And then if you want access to the indicators that I use to create these support and resistance cluster maps within TradingView, head over to Systine.ai. You can grab those indicators by just paying once for the indicators bundle, get lifetime access to it, or you can sign up for the Research Hub, which is a monthly subscription where you get access to the indicators bundle for the duration of your subscription, as well as access to the Research Hub, where we find asymmetric risk reward opportunities in the crypto market and present them to our clients. We'll send you an email as well as post them to the website. And that's not a weekly newsletter or anything like that. That's just as we find opportunities in the market, right? So we try to keep it relatively high quality. So there may be weeks at a time where we don't see anything, especially in a market like this. But when we do, we make sure to send it out as well as provide some analysis there. Thanks so much for tuning in. We'll catch you next time. Peace.